QDTE has a split fan base. Some people love it for the cash flow. Others, they've soured on it after the roller coaster this year. Today, we're digging into the real story. What's behind the high up and down yield, the price versus NAV shifts, and we'll try to answer, is it time to get back into QDTE? Make sure you stay to the end where we'll talk about what the latest job reports could mean and the projected rate cut to the market, that it's pricing it at about a 96% chance of having a 25 basis point rate cut. All that today, talking QDT, so let's get into it. Welcome back, guys. Rico here, and I've been following QDTE super closely, and as you all may or may not know, depending if you watch my videos, I had a huge holding of QDTE last year. And at one point, it was the third or fourth largest holding in my portfolio after QQQI and SPYI. Earlier in the year, I sold out of that position and MSTY, and I reallocated it into QQQI, SPYI, ULTY, and HOOW. I also added AIPI and FEPI too, but you can see that in my July and August portfolio review videos, so go ahead and click on those after you finish this one. And I've been asking myself lately if it's time to jump back into QDTE. So I did some research. Let's go over what I found. But before all of that, as always, this is not investment advice. It's for education and inspirational purposes only. Always, always, always do your own research and invest according to your goals and your plan. All right, that being said, let's get into it. So to help me figure out what I want to do, I always start with historical performance. You always have to know where you came from to know where you're going. So here's the scenario I ran. If I lump sum invested $10,000 at the start of 2025, what are my total returns today with dividends reinvested, and also if I decided to take the distributions as income? So looking at QDTE, we're going to compare it to QQQQ, which is a Nasdaq 100. So with QDTE reinvested, I would have an 8.87% total return. So that $10,000 would now be worth $10,887. Annualize that, it'd be about a 13.32% return. Comparing that to the Nasdaq 100, which grew 12% over the same time period, and that $10,000 would now be $11,202 with an annualized return of 18.05%. So that's if I reinvested all distributions. So without reinvesting dividends for QDT, I'd have $10,703, which would be a 7.03% return. And for the Nasdaq 100, I'd have $11,198, which would be almost a 12% return. So it's important to note QDTE's share price fell from $39.67 from the beginning of the year to $34.82 as of the date of this recording, which is about a 12% decrease in price. And because of that, it means that the dividends have been carrying the load, which for income investors, that's pretty typical. But let's look a little closer at those dividends. So QDTE paid $7.64 per share through August as of the date of this recording. So beginning of the year to August. And the yield at today's price, the distribution of $7.64 at a price of $34.82, that's about a 22% yield. And compare that to the yield at the January price at the same distribution of $7.64 at the price of $39.67 per share. That's only a 19% distribution yield. And that's a 3 percentage point difference. That's not insignificant and definitely worth noting and worth me looking at other metrics. So just by looking at the price and yield, you can see that when the price is down, the yield actually goes up, and that can look tasty, but this is why I always tell myself not to chase yield, because this is a great example of how yield can be very, very deceiving, because you're actually losing price and NAV, but you're increasing yield only because those prices are going down. A couple reminders from my past videos. So one, I am personally cautious with synthetics, even though I do own some ETFs, several ETFs that use synthetics and derivative strategies. They can deliver income, but they add complexity and they definitely add volatility, and they can also tell very different stories depending on the other metrics you look at. And secondly, when price falls and yield rises, you've definitely got to check NAV behavior and total returns. Remember, my number one metric is total returns, but I have to compare with everything else. And that's why we're running this exact analysis today, because this is helping me decide whether I want to get into QDTE today or hold off. Okay, so now that we've looked at QDTE's performance, let's look at how some other ETFs did during that same exact time frame. We're going to compare QDTE to QQQI by Neos, which also indexes the Nasdaq 100, and if you all follow me, is one of my personal favorites. And we're also going to compare it to ULTY, which has been one of the most polarizing ETFs ETFs of 2025. Depending on who you ask, they love it or hate it. And this will help us see how QDTE did against a more steady performer versus an ETF that is arguably more volatile than QDTE. We use the same exact scenario for all. We're doing a lump sum investment of $10,000 to start the year, and then we're going to look at the performance all the way through the end of August. So looking at these numbers, first we're going to look at the numbers with dividends reinvested. So we already know QDTE, it would have finished the year at 10,000 or finished August at 10,887. QQQQ would be at 11,202. QQQI with dividend reinvested is at $11,101. And ULTY would be at $11,149. So we actually are seeing that QQQI and ULTY with reinvestments would have outperformed QDTE. Now looking at taking income, so no reinvestment, QDTE we already know was 10,703. Nasdaq was 11,198. QQQI comes in at 11,023, which was surprising for me. And ULTY is actually the loser here with 10,590 at the end of August. So just some things to call out. ULTY underperforms QDTE when you're not reinvesting. But keep in mind, ULTY had a distribution yield of 80 to 100% during that time frame. So you would have definitely more income, like I would have more income from ULTY than I was getting from QDTE. Secondly, QQQI tracks the Nasdaq super closely. I mean, it's within 2 percentage points in both scenarios, whether you're reinvesting or taking it as income. So learnings from this is QDTE isn't the winner on total return, but you can argue that it does hold its own and it does deliver cash flow, which is the point for many income investors that buy into QDTE. I would argue that ULTY would have provided more income and QQQI actually is better for total return. So you can see. And me personally, when I saw this data early in the year, that's what prompted the move. I could generate better total returns with QQQI and I could generate more income with ULTY. Was it the right move? Well, it's served me well so far, but only time will tell. And if time comes I need to reallocate that, I may make some adjustments. But remember, I'm taking advantage of return of capital too with those stocks. Okay, with all of that being said, here is the real question and why you clicked on the video. Is now the time to get back into QDTE? Before I get into mine, I'd love to hear your comments down below. Comment down, I'd love to hear from you. But there's a few things that I want to get into. What's happening in the market and how could that maybe impact the answer to that question? So something that happened just today, so as the day of the recording, you're probably watching this much later, but we've got a weaker than expected job report from August. We only added about 54,000 new jobs, which was well below the forecast of closer to 70,000. And this is the lowest in the last 10 months. And for the first time since the pandemic, there are more unemployed workers than there are job openings, which is very concerning. And this tells me that the labor market is cooling for sure, if not freezing. So something to take note of. And secondly, markets are pricing in a high probability of a Fed rate cut on September 19th, about a 96% chance. And that would be around 25 basis points at least, with more on the horizon over the next 3 to 6 months. So that can also impact what all stocks do in general. But what could that mean for QDTE specifically? It could mean a rate cut tailwind, which could be a positive thing, where lower rates make high yield equity income more attractive versus especially things like bonds and CDs, when their rates get lower. And that can pull in more investors into products like QDTE, ULTY, QQQI, and that could help stabilize or even lift the price and the NAV. This could also be a falling knife risk. QDTE's price and NAV have been inconsistent, and synthetic income strategies can be whipsaw prone around macro inflection points just like these, like negative jobs reports or rate cuts. And speaking of rate cuts, that doesn't guarantee that it will have a straight up recovery. There are no guarantees. It's the stock market. And what I'm watching for before I'm getting back into QDTE, there's a few things. So I want to see at least 1 to 2 months of NAV stability. So not necessarily growth, but stability. And I don't want to see any more all-time lows or even 52-week lows from QDTE. And then I want to see some distribution consistency. So no sharp cuts or recent run rate projections built in. So I want to see that consistency. I don't want to see a 32-cent distribution, then a 12-cent distribution. That inconsistency I can't be having. And then finally, in a few weeks here, a post-September 19th sentiment. Does the market buy the cut or are they going to sell the news? So I want to see what happens then. Some other stocks I'm more bullish, but for QDTE specifically, I'm still in a wait and see. So My stance right now for anyone watching this, if you're already in and reinvesting, you've already cushioned the price drawdowns with income and you're good to, stay in if you want to stay in. If you're considering re-entry like me, this might be a chance to buy a high yield ETF that's on sale. Could be on clearance right now, but I'm personally still cautious and I want confirmation on NAV, payout steadiness, etc. All the things we talked about before putting fresh capital into QDTE. Just my take, what I'm doing. Again, do your own research, make your own decisions, put your big kid pants on and do your thing. So that is my take on things. And I'd love to hear yours. Are you holding QDTE or are you eyeing reentry like me, potentially? Does the potential rate cut change your perspective, whether in a positive light or a negative light? Is the yield worth the volatility for you? And if you're an income investor, that's probably an easy answer, but still, I'd love to hear your comments down below. Drop your thoughts in. Let's keep these conversations going. Let's compare some notes. And if this helped you out at all, or gave you any insights, I would really appreciate it if you could like, subscribe, if you haven't already, and share it with a friend who's curious about income investing. I'd love to continue to grow the community. And if you have any other ETFs or stocks you want me to review, definitely let me know. Thanks again for watching. If it doesn't challenge you, it doesn't change you. Messy action is better than no action. Take care, and I'll see you next time. Boom.